here for our fun Friday session. That's quite a statement. Bitcoin may be within 90 days of the first hyper bull phase, tricking some into believing we are at a cycle top. Let's go ahead and take a look at it. And on this fun Friday, put it all together. We'll start off here looking at, obviously, Bitcoin cycles. Yellow line is the current cycle. You're looking at the green line, Jordan, that is blue. Maybe fun Friday, but let's get our colors straight. That's a blue line over here. This is 2016. And then the light blue is 2012. We're matching them up over here from cycle bottoms. So you can see over here we have, since the cycle bottom, everything has looked a lot like similar price action. Before we get going, hold on one second. Before we get going, by the way, if you don't have, hold on one second. If you don't have Llama 3 unrestricted, you got to get into it. Fantastic stuff. All right, let's bring up the pointer over here. Let's get going. And then we'll be able to get into ghost mode. And now we could go ahead and work together. All right, you can see that as this off of the bottom. Now, the tricky part is trying to distinguish when the bottom of the cycle is. You know that there are people who basically throughout the bear market, 77% drop, every local bottom, they're like, this is the bottom. This is the bottom. This is the bottom. There are a lot of people out there who like to be like, you know what? When the price of Bitcoin, I love this about Bitcoiners actually. It's dangerous, but I love it. Every time price, like expectations are, we're about to shoot the moon. It's alt season imminent. And then like all of a sudden 30% correction. And they're just like, oh, well, I could buy more Bitcoin cheap. Next thing you know, 50% correction. Next thing you know, 70% correction. They don't have any more money to buy Bitcoin because they've been on the wrong side of the market the whole time. The hard part is knowing when the bottom is in, and you never know, but you got to be getting really good at having some way to distinguish when is a high percentage time to get into the markets. We did it, 17,250, bottom over here, lined up from the bottom, and you could see that this is March. Remember March 2023, the regional banking scare? But everything looked very similar. By the way, in 2016, this is into the June 2019 peak. That didn't look similar to past cycles, but look what happens from there. Just rewind a little bit. You remember from June 2019, Bitcoin went under a severe correction through the third quarter of 2019. I think it's a 55% correction. I'm not really sure. Let's take a look at it really quick and take a look. And you can see that 40% correction on a closing basis. I'm not sure what it was on an intraday. Call it 40% correction. And then you could see that what happened was a lot of reversion to the mean. And once again, all three cycles were in a similar place. Then what happened as we continued going over here, I'm trying to line these up on the left and keep them going. Something different happened again. I'm going to just go ahead and you could see the white line, this current cycle. And you could see that much like in 2019, much like the 2016 cycle in 2019 had that deviation. There's a strong deviation over here, a super strong deviation. And actually, price made a new all-time high prior to the halving, and then the halving comes in right over here in April. So something was different this cycle. Something was different this current cycle. And then once again, what we experienced was a reversion to the mean of all three cycles. Here's another deviation during, obviously, the global lockdowns. And again, some people were talking about, and it's very different. Price had never made a new all-time high prior to the halving before this current cycle. It has now. And then you could see that once again, we have nothing more than reverted to where we are, reverted to the mean of past cycles. Now, past cycles from this particular point on, and why the title says, and this is just for situational awareness. What do I mean by situational awareness? If you come back to over here, and once we broke out of the outermost trendline resistance, we wanted to make sure that we had situational awareness. Every time price had done that in the past, we've gone into a hype phase. Every time price had broken above the 0.786 retracement fib, we went into a hype phase. Both of those things have occurred thus far, although price had not gone into a hype phase, even though we were looking at past behavior. And in this zone, we saw price go into a hype phase. What we did is we looked for where we're wrong. Where is that wrong? We had a breakdown, 66K. And that was our first awareness that, hey, be careful. We could be in for a deeper correction. And we tried to navigate that, and we do navigate that. Having the mindset, because if you're thinking here that, you know what, we're about to blast off, Bitcoin's about to make its next leg up. It's not going to stop at 80K. It's going to 120K and then a blow off top. Alt season's happening, and you go ahead and you ape in, or just mentally prepare yourself for that outcome. Then when price comes off 27%, you can make some big mistakes. So you want to always keep a level outlook. You want to make sure that you have that your analysis is able to incorporate all different aspects of the possibilities that could happen, preparing for yourself for what is to come. Now, when it comes to execution, we don't have to rely on any of this. We have mechanical systems in place to help us to know when to be in the market, when out, and on what side. By the way, something as simple as a CTM bull market run. Let me just go ahead and bring her up over here. Right? And you could see out of the market since 66,000. And right now, price is at 60,000. And, people feeling a lot better than they did days ago when price was under 50K. But how good do you feel if you're out of the market at 67,000 when price is under 50? Safe and protected. This is for people who are not traders. This is for people looking for long-term solutions, as is something that we have here on the daily time frame. If you look at the amount of trades that you're looking at, this is, let's go from 2020 till present. So you could see in the last 4.5 years, there's only been 29 trades, 13% drawdown. No, I don't trade. I only hold Bitcoin. Okay, well, since 2020, how's your return looking? How's your drawdown looking? How many you've been through? Multiple 50% drawdowns, a 77% drawdown. So think about it. Think smart, think different. So where we are right now is, because what I'm trying to do is subdue expectations. We're talking about in the past, each cycle lined up from the bottom is setting up around 90 days from now, another situational awareness period where price has really shot up. Is it something to be aware of? You know what? Seasonalities during an election year. Let's jump over to seasonalities during an election year. And you could see that if you look at the red line, because the red line over there is an open field, which we have right now. And if you look at the end of October, now December is quite squirrely, but it ends up significantly higher than where it began. And then December is really, really a big month. And then if you look at Bitcoin seasonalities, now often it's double green. And when it's double green, you're talking about some pretty tremendous performance. 2020, 43% and 47%. 2017, 54% and 39%. Those are big months. Or you could have some smackdown red months. Now, again, we're just looking at seasonality. Seasonalities in an election year, they point to this particular period of time being favorable. If we look at past Bitcoin cycle behavior off of the low, it points towards this particular time being favorable. Do you think that's something that we would like to be aware of, watching out for, and then look for where that's not taking place or where that's wrong? Yeah, I think that's really smart. That's what I want to go ahead and do. And that's why we're looking at this here together. If this were to occur, we would be looking at, a potential top in Bitcoin into the first quarter of 2025. Now, do I personally think that in the next 6 months into the first quarter of 2025, that we will be looking at something like $250,000 Bitcoin? I mean, the question I ask is, well, where would the money come from? It's one thing to look at price and past price behavior and cycles. It's another thing to look at the current environment and, you know, it would be something if that type of money is about to flow into Bitcoin, where is it going to come from? I don't know. We'll find out, but there would need to be a real viable catalyst in order to see that type of market cap. Money would actually need to be really coming into the space. Now, is it possible that we see something like, you know, in this zone over here into the end of the year, $80,000 Bitcoin, $100,000 Bitcoin? Yeah, I think that's more than reasonable. And I think that, you know what? Let's watch out for if we're able to make these new, I like that. Think smart, think different. The ETFs definitely help. And by the way, as we talked about yesterday, as we were watching that really favorable price rise, we said, well, there's probably going to be inflows into the Bitcoin ETFs. There was almost $200 million of inflows into the ETFs yesterday. And there's a strong correlation between price and the inflows and outflows. Now, I was kind of expecting a bigger day with a 10% increase in price. And I was expecting something more like, I guess it's on par with those outflows, 240, but 170, 150. So yeah, $200 million on par, I guess you could say. Ethereum yesterday was almost flat with $3 million of outflows. Could it come from ETFs? Yes. I mean, so far we've seen a very large net inflow into ETFs, but we also see a lot of, depending on if price is up or down, we see a very high correlation between flows in and out of the ETFs. I think it would have to come from something else, something significant. Again, I'm not talking about Bitcoin hitting 80,000. I'm not talking about Bitcoin hitting 100 or 120,000. That seems to be well within the current environment. And if price is rising and holders are not selling into it and holders are holding, and then you begin to see retail, getting excited, and not just retail, but funds and whatnot, for sure, we could see those type of prices. If we were to run into those type of prices and then we were to tag somewhere in that area, I'm just talking hypothetically right now. I'm just completely speculating. And notice that in these areas over here, then we came into some pretty decent drawdowns. I imagine that there would be a lot of talk in this area, if it not just January into the first quarter, of that being the cycle top. There's already talk of this being the cycle top. Or, Bitcoin has already hit its cycle top at, 73, 74,000. And we're about to enter into a recession and blah, right? Like, people with these crystal balls who's, for some reason, just could have been on the wrong side for a long time. They just remain persistent and consistent. So I don't know what's going to happen next. I know I don't need to know what happens next. I know that I'm going to be on the right side of what happens next. And that either means long and strong if I'm buy side only, out on the sidelines, or when the price is dumping, out on the short side, because we follow momentum. We follow it really well. There's no question about that. However, our analysis, our discretionary analysis and awareness is pretty strong. We have a long history through many different cycles, in bear markets, in bull markets, in sideways markets, getting it right and being on the right side. I just want to be very clear in looking at the potential of what could happen in 90 days. It's not anything different about is looking at what was happening here as we entered into an awareness point, a second awareness point, and then we looked for the invalidation. That is smart. It's not like, oh, we entered this and in the past this has happened, therefore it is an assured outcome. Anything but that. We're always looking at our risk and where we are wrong and potentially wrong. And if we start to see a price basically be able to maintain the range that it's in, and by the way, we have another awareness point over here. If price is breaking out through the top trend line that we looked at yesterday, that's going to suggest to me that we're looking at some near term upward price action. Like that's going to set us off on towards that our expectations are we're not waiting for sometime into end of October, November that it's on now and we'll be watching for that. Same thing if we take out the bottom over here, it could be longer than anticipated time wise in order to be able to recover from the damage that will be taking place structurally. This is why every day we show up and put the work in because there's no like, let me go ahead and share a chart of the last 12 years and somehow, this is going to, I've yet to see someone been able to do that on an accurate basis. So that's a lot to take in. I hope you're all taking it in because we're going to keep going over here together because we got more to look at. By the way, every time in the past does not mean it will happen in the future. Every time in the past, you're looking at a monthly chart, Bitcoin has touched this trend line. What has happened next has been an all-time high. Even the recent one that occurred over here. You could see that this is the end of November 2023. It's already led to the new all-time high. Here we are again. We've touched it one again. Does that support, that potentially we're getting into an area over here where, within 90 days from now, we could begin a very strong ascent and make new all-time highs? Maybe. For me, when I look at that chart, I also say, well, on a monthly basis, closing below it, that would be bad. That would mean that something is different. That has never happened before. Let's watch out. Now, I would put this trend line, by the way. This trend line is, I don't know. I would be putting it below the close over here, below the open over here, which matches directly below with the open over here. That's where I would have it. But rough sketch, that's fine. Just some awareness. A lot of people like the look or the thought. They've seen this chart of the RSI, and a lot of people thinking that means that a lot of elasticity has gone out of the price action. They view this as very, very bearish. I view it as very, very, very bullish. I view it as that means that price is coiling over here and that we're getting ready here for some favorable price action. I don't think, and the reason that I say in the title is that tricking some people into a cycle top, if we are to reach 120,000 Bitcoin, 110,000 Bitcoin in the first quarter, and that's any type of near-term top, intermediate-term top, a lot of people are going to think that that is the top of this cycle. A lot of people. And that is going to be the narrative that you see spread throughout the social circles, whether it's Twitter, YouTube, or whatnot. I personally do not think that is the case. I don't think that will happen. The reason I don't think that will happen is because at some point in time, we're going to see and need to see a monetary policy response. Let me go ahead. We're getting towards the portion of the cycle where the Fed is beginning and getting ready to cut. By the way, I love the interaction. It really helps when you hit the thumbs up. So smash the thumbs up if you enjoy being here, if you enjoy CTM live streams. And if you hit a thumb down, then that's awesome because it really helps the channel. But please go ahead and include your insight into the comments. Because unlike a lot of very much part of being part of the CTM community is embracing all different biases and sides. In taking a look at someone else's bias, all it's either going to do is adjust and change my own, or it's going to affirm my own. I'm truly confident in my and our abilities to navigate the markets, that any other opinion is fully embraced. But if it comes from an emotional state and a reactive type state or ad hominems, well then you've just lost yourself in the conversation, because that's you don't belong. So is the all-time high in? No, the all-time high is not in by any means. And what I mean by that, and I'm going to come back to this, is that don't forget, and it's very important awareness as we look towards this is mid-March, mid-April. From mid-April, and you could see right now, because a lot of people in mid-April were expecting price to by now be well over $100,000 or whatnot and what have you. And at that particular point in time, I was making aware to CTM, hey, listen, be careful here that where we are in cycle. And I pointed out a lot that where we were in cycle was a lot similar to this area than price about to hit this area. Now, has that been correct? I don't know. I don't think so. Yes, we have not made a new leg up, and we've had the biggest drawdown of the cycle, but the cuts haven't begun yet. The Fed hasn't begun cutting yet. And yes, the first rate cut may be perceived favorably by the market, and as well as the second. But as we move towards the phase of the cycle where the Fed begins cutting rates, that is a time to really, really be keenly aware. As quantitative tightening is running, as they begin cuttings, that's usually when we begin to see a lot of moving parts of the financial system really come under pressure. You saw a spark of that, and it was only a spark, but you just saw, as the Bank of Japan raised rates 0.15%, you saw, 75% of the yen carry trade unwind. And you saw how that affected markets. My own personal speculation is that this cycle, it's not going to be the SOFR rate like it was the LIBOR rate in 2019 that breaks. We may see signs of spiking, right? We've already seen some signs of it spiking in these past 7 months, and we might see some issues occurring, but likely when things break this time, it'll be different. And we've pointed to likely it's something that happens in Japan or Europe. Out of the big four, China, US, Europe, and China, they seem to be both in the weakest position. And it would be logical that something doesn't mean that that's what is going to take place. But as we get towards this point of the cycle, this is not really like a risk on type of environment. A lot of people point towards, the 4-year cycle of global liquidity. And I'm reminded that 2000 and 2008 match the favorable point of that cycle. And those were huge market crashes. So just something to think about. And all we're doing here is continually firming up our own awareness. By going ahead and taking away your overconfidence and realizing you need to be coming from a place of humility, you're going to be a lot more prepared to be able to navigate these markets. Once you understand that you have no idea what comes next, and all that you could do is continue to try to make observations, learn from the past, know the past, put the work in every day, and then all of a sudden, it becomes a lot clearer. So when we look at, and one thing that I'm reminded of over here, though, is that this current run that we've seen, on the stock market. So let me start off the very bottom, right? Check this out. Like, not from a percentage basis, but from the amount of days, you're looking at, um, 650 days that the markets have been in this massive bull run. Nasdaq up over 100%. We'll call it a strong bull run. And if you go back to over here and you go back towards when, the very bottom of when the Fed came in and reacted with massive policy stimulus, flooded the system. Look how many days the bull run happened. Well, we've just surpassed it. So this was 645. We're currently 650 days, and that's without any like stimulus, right? The Fed is still running off balance sheet. Rates are at a extreme. Not, I want to say extremely elevated. Rates are a lot higher off of zero. And nevertheless, the markets have been running longer than they did when there was a favorable policy response, when the bull of all bulls was really running. Now, the magnitude of return, 100% versus 150%, that's a little bit different. So I guess what I'm trying to point out is, under unfavorable circumstances, now there are other people who have different formulas for pointing out global liquidity throughout 2023, the early part. We took a look at them, we incorporated them, yada yada yada. But we are in the portion of the Fed cycle where they're tightening, they're not easing. And maybe the first cut, if it's coming into normalization, will actually be something that's very favorable, in so much as when they began the taper of the easing was a negative for the markets. So maybe as they begin the cutting, if it's into normalization, and when I say normalization, it's just so important to remind you all, because once the first cut comes in, you're going to have everyone talking about how it's a good thing for the markets, and maybe it depends on if you're cutting into normalization, if it's a panic cut, or if you're cutting into a recession. And it's hard right now to distinguish which one of those things is happening in real time. The truth of it. Sandra, great to see you in here today. Is it possible to have a session on global market situation point, what to expect for the next 6 months, and define the templates that we should use, if you don't mind? So, Matt, I mean, that's the $1 trillion question. You're seeing 10 likes? Oh man, thank you. Thank each and every one of you 10 who went ahead and hit the like button on here today. I really, really, really appreciate that. Sandra, I don't know what comes next. I have no idea. And looking at this chart here of the Nasdaq, and I want to tell you why it's so important that we don't need to know. If you look at this chart here of the Nasdaq and you look at this line over here, at this point in time, go to the Twitter feed. If you remember the live stream that we were doing, we said, right now, everyone is so completely bearish. I had a bearish tilt by far to the macro. And as price traded above the trend line, I said, well, we got to close our eyes because it's a technical breakout and just go with it. And then we moved into this period. And then right over here, as price was breaking up, still everyone was extraordinarily bearish. I had to go ahead and share this chart with everyone. I went ahead and inverted the scale, and then I shared this chart on Twitter, and I said, if that breaks, that could be a waterfall down. And everyone looking at the chart, not knowing it was the Nasdaq, they were like, absolutely, that's very clear. That's very bearish. And you go ahead and you invert the chart, and then you let them know that's the Nasdaq. A lot of people were able to check their bias. It was very helpful. And sure enough, it was a waterfall that occurred. And most people truthfully, at this particular point in time, myself included, even though technically able to get it, was not expecting in the next 650 days that price would be up 100%. There's no way that was my expectation, that the Nasdaq would be trading just off of 21,000. No, that was not my expectations. And we're looking here at CTMX templates. We're using CTM 2.0 templates. Point being, during that whole period, let's start off with NVIDIA. And you could say, regardless of what you expect, CTM banging off the buy side on CTM 2.0 templates, banging off the buy side when I thought the run was probably done. I know we called the move off the October low. I know that we did it. I didn't expect, I thought price would hit the top of the range. It broke out quicker. I didn't expect that we would be up this high. Doesn't matter. It's the template. It's not just NVIDIA, right? We do FNGU, one of our beauties. And same thing, moving down to 2023. I mean, price action to the upside, forget what your expectations are. Knowing when to be in the market and what side and out is everything. That came from meticulous hard work by the whole community for a long time and continues to today. So regardless of thinking about what happens, this is stocks because I'm trying to show you from 2023, I did not expect the Nasdaq would be up 100%. I did not expect we would see the extent of the bull run we've had. It doesn't matter. You don't need it. It's not any different when looking at crypto in so much as that we can move towards our templates on crypto and knowing when to be in the market, when out, and on what side is absolutely everything. So Sandra, if you're trading not actively and you're trading Bitcoin and you're wondering what happens over the next 6 months, are you much better off of what happens if we enter something like the bear market, right? What happens if we're about to rip up? I don't know. You don't know. And probably it's clear from following a plethora of people on Twitter that the vast majority of them, they don't have the track record over the last 4.5 years. They don't have it. And as good as my awareness and strategic positioning is, it doesn't even matter. That's not nearly as good as having a mechanical edge to be able to navigate. So, Sandra, we try to take a look at what is happening in the markets and digest it, but it's not possible to do. I've been saying this since January 2024. There's no way I could give a 3-month outlook at this particular point. And that has not changed. And that's a really strong position to be in because you could be like, there are some like upside analysts that are like always, very bullish. And, they're right most of the time. And then they're very wrong in the bear market. That doesn't matter. Generally speaking, that lasts a year and then they continue their like uber bullish upside analysts but they're not predicting. They just picked a side and they're staying on that side. And you have the same thing on the perma bear side. And we're trying to get it right. And we're trying to get it right all the time. And we're trying to get it right with precision. And that means that it's impossible to say what our expectations are over the next 6 months. That is an election away. And there are right now a lot of moving pieces financially. There are a lot of moving pieces geopolitically. Man, embracing not knowing and not needing to know, that right there is next level. I mean, Troy, lots of love, appreciate that support. And quick videos are hard to do. The markets to me are very complex, and there's a lot of nuance involved. And truly, in my opinion, like if you were to watch CTM daily videos for 90 days, your market knowledge would increase drastically. And here's the thing, we have a whole community of people who have been with us for a long time, and their knowledge continues to grow each and every day as well. And then all of a sudden, it becomes really iron sharpens iron. And you got to commit to the long term. That's for sure. Hicksville, Plainview. Wow, huge shout out to Strong Island over here. Lots of love. Lots of love. 516 in the house. This is, by the way, I wanted to check in. This was on CTM while I was away in Bosnia. And we were looking at, for a long time, I've been talking about the need within CTM, not just to go ahead and continue off of what are some elegant solutions in the market that we have. We trade momentum. That means when momentum is kicking up, we're going to be long. When momentum is kicking down, we're going to be short. And when it's not, we're going to be on the sidelines or getting chopped up a bit. And we get chopped up most of the time. What are you talking about? Well, if you look from, this is only starting in 2021. Let me just go back and guess what? If you heard this 100 times, it doesn't matter. It's still just as important. It looks like our P&L goes up and to the right because that's what's happening, but that's not what's happening. Most of the time, we're trading sideways, either out of the market when this line is flat over here, we're out of the market, or in drawdown before price breaks above the blue line. I'm over here on the top. Before price breaks above the blue line. So the majority of the time, we're not up and to the right. We're actually sideways, running sideways in drawdown. And for the longest time, or for a long time, we've talked about, what needs to happen is we need a complementary strategy, a mean reversion strategy. Now, the CTM kicker, the bull runs are all going to play a role. But right now, we're talking about mean reversion. And during this particular moment in time where we're running sideways, that's because price is not kicking up or kicking down. It's trading sideways in some type of range. And a mean reversion strategy would offer the perfect complement to our elite momentum trading strategy that we deploy in the market. And this is consistent talking. And then very recently, someone within CTM Core has been picking up, issuing a prototype on what that looks like. And we did a session showing during these recent periods where price is moving sideways. For example, in this range since March. Talk about awareness. You remember on the live stream March 14th, as we took profit, I said, be careful. We may be getting ready to move sideways for a while. Ace was consistent in saying, hey, listen, guys, we're only 30 days in. On average, this could last 150 days. Ace, right on time. We're now about 150 days into this. So we're a lot closer to the breakout, and we've weathered this storm tremendously well as we're at a new all-time high, or just off a new all-time high on a closing basis. But if a mean reversion strategy is being used, instead of just going sideways, we're smoothing out the overall P&L. We're rising during this particular basis. And let me show you. Here's the last two trades since we took a look at this last week. On August 1st, trade into the market during this range that we're in. 7% on the short side, 7.7 on the short side. Now holding a long here, 1.4%. You could see, and that's this area here, the advantage that we're going to have here as price moving up, we're crushing it. Price going sideways, we're just treading water for now. we're going to be able to be taking advantage of that soon to come. So Ethereum here, still holding on to an open trade here, holding 18% into profit. Solana is in a short trade and getting ready to exit this trade potentially. 6.5 hours is a long time. We'll see whether or not we're going to be continuing looking to exit that trade or not at the next signal period. And Cardano still holding its short 15% into profit. And that right there is CTM strong. So Sandra, I wanted to tie back to, I hope that makes all the sense in the world to you, in so much as that it's very fluid. There's nothing easy about it. It takes a lot of work. It takes a lot of work. And that's why we're here to put the work in. Everyone, this is our Friday session, fun Friday session. Monday we'll be back at it, and we're going to heads down, put the work in, continue building, navigating, and staying on the right side. For now, I wish you all a beautiful, beautiful, beautiful day. God bless you. Have a wonderful weekend. Big shout out to everyone on the replay crew. Thank you all for here who will be able to be here for live. I'll see you all on Monday. Take care, CTM.